Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA. Now, Jeff, good afternoon and thanks for coming in.
Always a pleasure, Brian.
Now, Jeff, let's take a quick look at markets and see how markets in the region are performing. We're going to start with the SGX, which is at 3,019.01. It's up 0.14%. The Bursa Malaysia is at 1,585.07. It's up 0.24%, but it's a sea of red across the region. With the Nikkei at 28,796.48, it's down 0.46%. Shanghai Composite is down 0.34% at 3,491.61. The Hang Seng is at 29,155.4. It's down 0.28%. ASX 200 is also down 0.84% at 6,703.90. And rounding off, we have the Kospi down 0.58% at 3,025.81. Now, Jeff, we've had US Federal Reserve Chair Jerome Powell saying that after the economic reopening would create some upward pressure on prices. Now, that's obviously spooked markets because we had the NASDAQ Composite falling more than 2% overnight. So what's your view on Asian markets' performance in the first half of the day?
Yeah, he's actually stayed on message. I mean, he's telegraphed that inflation would rise in the coming months as the economies around the world recovered. It's a good type of inflation, though. It's not wage price spiral, sticky inflation. It's transient inflation caused by price input costs rising as economic activity picks up. Asia today started off negatively, but much of Asia has actually recovered those initial losses, most especially because China is holding their People's Congress today, where they outline their targets for this year and the next set of 5 years. They came back out with they reinstated the GDP growth target, 6% plus, slightly less than what the market was predicting this year, but nevertheless it has returned.
What's that signaling the market, that 6%?
I think he's hedging his bets because quite clearly, I mean, China is not invulnerable to events elsewhere. And if the global recovery doesn't happen as quickly or some other virus strain emerges of COVID-19 or something, growth could slow externally, which would inevitably impact China's growth as well. So he said it quite conservatively by saying 6% plus. But I think more importantly, they did target or signal that they were interested in joining the Regional Comprehensive Economic Partnership, which is an awful mouthful to say, so I'll just say RCEP going forward. And that has been positive because ASEAN is, all the countries in that are members of that, Australia and New Zealand, etc. So for Asian stock markets, that's been quite a positive, a more engaged China and regional trade. Is positive for business everywhere, and that's seen both the Shanghai and the CSI 300 unwind most of their losses, but also you can see it across ASEAN stock markets. They're either slightly lower or slightly higher, just each side of unchanged, as opposed to slavishly following the sell-off we saw on Wall Street last night.
Yeah, and I want to talk to you a little bit more about that because Bursa Malaysia and the SGX bucked the trend and it's in positive territory. What's that brought about by? Is that something to do with Malaysia having its own special circumstances internally?
Well, I believe part of it is this RCEP, but actually Malaysia opened up higher today and the outperforming sector was energy. So we saw oil prices skyrocket last night after OPEC Plus surprised the markets by not reducing production cuts. And that's been positive for Malaysia, obviously, is somewhat of a petro currency on the margins. And it's been positive for the energy sector in Malaysia. Obviously, the government gets a lot of its money from that sector as well. So it's generally a bullish development for Malaysia in general. And that's why we've seen that sector outperform, even though other parts of the Malaysian stock market have fallen today.
Yeah, because from a budgetary standpoint, the Malaysian forecast is under $50 a barrel. So we're way above in terms of where they want to be from a budgeting standpoint. But Jeff, I want to ask you about the OPEC Plus meeting at which they sprung this big supply. Saudi Arabia will maintain its 1 million plus barrel a day voluntary production cut. So what's your view on prices now?
Moving forward, go up, I think. OPEC Plus has moved to a monthly meeting cycle to decide these production cuts, whether to adjust them or not. That's introduced a lot more binary uncertainty on a month-to-month basis. In the old days, last year, every 6 months, OPEC Plus would meet. They would squabble for a few days, and then some sort of decision would emerge. Now that's going to happen every month. So they have a lot more, they can manage this whole situation a lot more dynamically. They chose not to reduce those cuts last night, including Saudi Arabia. They gave 150,000 barrels to Russia and Kazakhstan, but really it's a net 1.35 million cut remains in place, basically, when you include Saudi Arabia. So, because the market was expecting them to unwind 1.5 million barrels of cuts. That's going to keep physical supplies very, very tight. We can see that in the backwardation of the futures markets. And with the physical supplies tight, the only way is really up, and that's why oil prices rose by 5% last night. I think also what they chose to do is send a signal to the markets to not make assumptions, because the market had been assuming this week that this 1.5 million of cuts would be unwound. And I believe that OPEC is just saying, not so quickly, everybody. Yeah, and they have the opportunity to do that because they're making these decisions every month.
Yeah. Now, thank you very much for speaking to us, Jeff.
Always a pleasure, mate.
Well, we've been speaking to Jeff Halley, Senior Market Analyst at Asia Pacific at OANDA on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.com.